Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go, and boom indeed to the upside with BTC breaking through that 42,394 daily support level and bursting on through to the other side, past the liquidity zones as if they didn't exist, all the way to all-time for recent highs, putting in higher highs here at 45,406. So do we get a continuation here, or is it going to get a pullback? We need to look at the liquidity as we see every day. Before we do that, let's go see what we were talking about yesterday for BTC and hold ourselves to the flame. We did give an update to the group saying if it did not make it above that cloud, be careful, but ultimately it did do that push up and break down, and you're saying, no, you didn't have it like that. Yes, I did. I had this thing saying it's getting above that 4-hour cloud, and then you could get a burst up to here, and I'm like, it won't come back down. Who knows? It might even go higher. And sure enough, it burst on through to that other side, making that 45K run. And this is how you piece together the puzzle of BTC alongside with me. 2024, Happy New Year to everyone out there. Everyone is now in the new year. So let's go into high block. What is high block? Well, people lock that liquidity into the charts to get burned to a crisp by the market maker for not using a stop loss, and we get to see what those crispy characters are. So let's do it now. Okay, so, oh, whoops, gotta log in. Give me a second. All right, we're back. All right, and all right, so on the 1 minute time frame, we talked about this pool. I believe it was $165 million character. We had it marked off in our charts as well up here at 43,062, and that guy got eliminated. That was this one here, 43,062. This guy got eliminated. And beyond, we had another pool up here from before that we just left there, and they came for that guy too. So
fatality.
And they came back and meandered around here and came for that liquidity, and now they are heading up into this deviation level of this impulse to the upside. So the signs were there. You had the 236 support. We talked about this bullish trend-based fib level support zone, and we got a bounce off the 786. We didn't necessarily come back to that wick, but that was a breakaway idea. Technically, you did have a double bottom here. You had 1 and 2, and that was enough. So that could have been our double bottom event to reaccumulate beneath this 236 and come back up for some fun. So let's go ahead and expand our vision to the higher time frame, as there's clearly a lot of liquidity down here at 44,418. A lot of breakout traders that they could come back to and refuel off of. Some people opened up here, so they're coming back. They refueled off these 73 million breakout trader longs.
Fatality.
Don't be a neophyte. Don't do that. And then they might come back for their brethren over here, the 165 million down at 44,449, because that's the largest liquidity pool over here in the immediate 1 minute time frame. There's a thick band up here, so they might come down here and do some more shorts and wick-whack around and head higher. So let's go ahead and expand our vision to the higher time frame pools and not waste a second more of your time. I have some videos to make. By the way, we uploaded a new video. If you're interested, it is a quick guide to order flow. So go ahead and check that out. We used the interesting AI thing. If you're interested in the AI stuff, let's
look at the insights of order flow dynamics in trading.
There's this AI character generator you can check out for free. It's pretty cool. You can make a character, create scenes, and animate them. So we played with that and gave ourselves a British accent.
First.
Fascinating, really. But anyway, moving on. So the 7-day time frame, we have taken out all of that liquidity on the 7 days. So you're asking, why are we going higher here? Well, we had that monthly liquidity zone, and also looks like on the 7-day we're spawning some liquidity up in that 47k region, which was previously threadbare, is now getting thick. So there is a narrative to even break all the way up to 48k at this point. If these are protected positions of the market makers and the exchanges, they have no reason to go further down, and they just came and took out those double-digit pools we were talking about for oh so long, it seems.
Fatality.
Yeah, you don't want to put all your eggs in one basket, and we were short, but we were also long at the same time. We're pivoting alongside the marketplace. And if you look here, 45.4, we came up to that band 30 and 30, basically $90 billion taken up into that 45.4 region. On the 3-month time frame, it's pretty threadbare up there, but they could just reprice and consolidate up here while they distribute to all the people expecting a V-shaped short idea, and then they could fuel their way up to that 48k now if that's their repricing model. So be careful, watch for confirmation. We always talk about it, the power of threes, basically hitting the high 3 or 4 times for that confirmation. Don't be that no structure shorting guy. So let's go ahead and take a look. 2-year time frame, yep, we came up to that liquidity. Let's go back to the monthly and then go into the charts for Momentum Master. So what is Momentum Master, you say? Well, link in the description for more. momentummaster.info. And you can scroll down to the features, toggle everything at your leisure. We had the rocket ships. So we didn't have rocket ships this time. We were overextended, but looking back in retrospect, this was similar to the September 11th breakout idea without the rocket, because the September 11th did not come back down for a double bottom. It did a little mini double bottom back in here. So we're going to go back and show you that. We were doing a little bit of an analysis of the September 11th breakout, and it was kind of similar to that. So here, so the September 11th did a little mini one here. If we go back, so if we go back to September 11th and study the past, you will see we had a liquidity grab similar to what we just did at 41k. It created some rocket ships. We had that TA for you, and it kind of V-shaped out, and then it came back down again, and that was your double bottom, and it never really reclaimed this vector candle over here. So if we go to the 4-hour, it came back down to the cloud, but it didn't come back to this level, and it was extremely bullish, and then it just broke up from there, and it maintained the super trend. We had that so it came back down, and this is similar to what we just did, but we didn't come all the way back down to the bottom. It held this zone, reclaimed that cloud, and boomed to the upside. And this was another one that appeared. We had another rocket ship down here in a smaller time frame in October, on October 13th, I believe it was. But it was very similar in nature, that it did not create a double bottom really this was a little mini double bottom within this. Here's where we had a rocket ship on October 13th. We have a short video about that. Actually, the short video is from here, I believe. But yeah, so it was similar in nature. If we go back here, they came down for that liquidity grab idea at 41K. And then they broke up and they held that 236 level and never went back beneath it. So there was an attempt to do so with that drop here with this extreme volume thing on Monday, and it held the super trend and it was gone. So we talk about trading with the cloud. We don't like trading against it. So as soon as we got back above this, we were into the long idea and talking about confirming on that cloud. We did confirm around the New York Open and banged to the upside. So let's go ahead and see where we can go from here. We're seeing a nuke on our chart that did not lock in just a moment ago as we went up into this region. We did hit this pool, this deviation level. We could keep going into that 45K further up into this 45,697 resistance level, but as it stands right now, we're getting a little bit of a pullback into those longs we were talking about. That 165 million liquidated. Do they come back for this 50x brethren down here? They're eating all those 100x breakout people, hoping for 50K that have no idea what they're doing. So possibly coming to that 44,449 region. Short scared to open here, so there is justification to come back to this imbalance. So we'll see. Does it come back down to that 44,448 level and consolidate here? Let's erase this. It's in the past. It's forgotten easily. So let's move on. All right, so you also had the 6 time frames oversold. We talked about how the 5s and the 6s are your bread and butter a lot of times if you play them well and you see the narrative of the 3s building into the 5s and 6s. What does that mean exactly? Well, that means that you have a lot of time frames oversold. This is your 2 time frames oversold with the circle, diamonds at least 1 lower and 1 medium time frame, the X's at least 1 lower and 3 medium. And so if you get a lot of medium time frames oversold, it's starting to suggest a market structure shift to the other side. So they induced the trap and sent it. So now we're waiting for that confirmation pullback. Does the confirmation pullback reach another bullish level of consolidation here? The move has basically expressed itself. So if you were in, you were in. If you're not in, be weary, because this is where they start to chop up both sides, that the FOMO traders. All right, so on the hourly time frame, well, first let's do our daily diligence level. We were talking about this 3-day cross down event. So the theory still holds water. If we cannot get above this 3-day close, 3-day candles in the next 2 days above this level, this could be your just straight up liquidity grab rejection off this 706 or 65 or daily support, daily resistance level to come lower. We talked about how that happened here in April. We came back up and eventually crossed back down. So do we get a deeper pullback on the 3-day? It's not going to be as clean as July 24th by the looks of it. So this could be a April Fool's style coming higher, and we were talking about that too. So coming back for a pullback idea potentially on the 3-day to watch out for, because that cross down was locked in. If we come to the daily time frame, we had that kiss to the cloud and that bullish trend-based fib confirmation idea. to look at. Closing daily candles above that 236 was your sign for upside potential. We also talked about, I believe, the money flow imbalance on the 6 hour and the 4 hour. We'll get there in a minute. The 22 also had that idea for you, but not as clean. Let's go to the 12. Hour time frame had that cross-up event. We talked about how would New York close with that cross-up intact, and so all of the signs were there. You were holding the 236, cross-up event of the baseline. It was the only thing against you, going against you was the cloud. We said watch out for that cloud unless we can close a candle with conviction above it. Be wary of that. This is an instance where the RSI came up to the money flow on the 6 hour, and that was because the 4 hour disparity that was here. We had this 4 hour money flow disparity from that 236 level. We talked about this money flow and the RSI being separated. It starts to suggest the money flow comes up to the RSI. We've seen it many times before. We were making a lower low on the money flow and a higher low on the price. It didn't lock in because there was this equal here, but technically this is bullish divergence on the money flow too. And we saw this on this hit to the upside. If you had sniped this 45,266 open area, you would have had very little drawdown on your short here. But it is extremely risky to think about shorting into that strength, but that if your TA holds up, your TA holds up. So this is only a percent pullback. As you get higher, these changes in price mean less because there's more of the price to deal with. So a percent move is not so much. So coming to the hourly time frame, the hourly getting gassed on the Williams, money flow, RSI, everything just pinned. Here's where you have to wait for those 3 hit confirmation ideas. So the move has just basically played out, and we talked about possibly total getting this hit up to this region, getting this insertion of money to that zone. It did get that insertion of money to this gap zone here. So we're starting to see a possibility. We first got a rejection off the 618, but holding this cloud, getting the money reinserted after the new year. Alts also getting this burst, flipping this daily support structure into support and coming back up again into this gap. BTC dominance taking a bit of a rise as we saw shifting on these 618 bounces, so the dominance coming back into effect. The USDT dominance we said was going to reject off this cloud and potentially come down to this region. We were on point with it, and they are coming down exactly as predicted. So we're going to let the dust settle after this. I can't really give a move. I think we were pretty accurate thus far, so we'll just see where it goes from today. Let the dust settle. The first day for the markets to be open, and Q also doing its thing. We put out in our analysis video for the order flow that this top was pretty much clandestined by our indicator as well. We were seeing the nukes on our indicator here and seeing the order flow of the trap traders. See this? Sometimes it doesn't lock in on that time frame unless you replay it, but in the moment it will give you those alerts to your phone. If we go back to here, we were getting nukes going into that news play, and then we were seeing this come up for that news play in New York. It came up for the 8:30 news play, and then there was some trapped traders up here, and this was an easy entry on that order flow idea. and boom, to the downside. And basically we had this huge sell-off going into the new year as people closed out their positions to do their taxes on and reaccumulate lower. All right, so where do we go from here? The dust has settled. Let's go back to where everything is now. So for NQ, you are getting a bit beneath this 1720 daily range here that we accumulated and burst up on. So are we redistributing here and considering to come lower down to this level here? There is a draw to that to finish out this liquidity range and possibly go even further down. We're gonna clean up this a little bit and try to show you how we do it for NQ. Okay, so the NQ has, so we have a gap up here that dropped down from this region, basically that level to this level. You have this whole gap in this region. On the 6 hour, a little bit of a draw here at some point, but that is basically, you could just come back to the 50% level of that zone and possibly reject off that, coming lower. Hey, what's up? What's up, kiddo? What's this? You want a marshmallow? Can you ask your mom right now? I can do it later. Please close the door. Thank you. Can you close it? Thanks. And so, yeah. Oh, where were we? So coming to the 4 hour, kids in Japan get a longer holiday, so they are off until like the 5th or something. So this entire wick coming back down for a double bottom on NQ and possibly drawing into some gap down here. I think there's a gap, and we're just marking off the lows. The wicks of everything tend to be draws on liquidity, so there's no reason not to put that there. And yeah, looking at the hourly, so the hourly chopping around here, if we go up in here, make this more pristine. Okay, so coming back down to the sub 17k region for a double bottom, and then watching this possibly come lower and then build its way out at some point. How can you figure this? Well, you can use a trend-based fib level, and you can go down to the impulse here, rise to the expectation of the impulse there, and if we come beneath this 236, just like we did with Bitcoin going above the 236, you could be coming down to these levels. Look at how accurate that was with my eyeball. You learn to just know what the deviation level is. So yeah, coming down to that support, this wick perhaps. Who knows what the future holds, but this is just starting to build a narrative structure for NQ and the markets going to the Dixie. The Dixie didn't even come to that 0.5. It was still bullish, and even still Bitcoin went to the upside. It came only to that 236, never even went beneath it. It was an ultra shallow retrace and continuation. This ultra shallow retrace idea shows that, let's see, that it could come up into this region perhaps for the dollar. And yeah, going to gold. What is gold doing? Gold just went sideways for the stuff. Let's look at oil for my man. CL, crude oil. Oil getting a bounce. Everything getting a bounce after the new year because everyone sold off into the new year for tax purposes, most likely. So we're getting more of a pullback here on BTC as it comes into these shorts. We were talking about these shorts at the beginning, not the shorts, the longs. These breakout neophytes that are getting clobbered right now in drawdown. These guys, this pool now in drawdown. Let's go say what's up. Yo, wait, where's my stream? There we go. Hey, what's up, Dingo? Steven, how you doing? Not a bad first day. Yes, indeed. You guys have anything you want me to look at while you have me? Now's the time. Dixie. I'll give you a moment to decide what you want to check out, if anything. Essentially, it's trying to reaccumulate up to here. So for the time being, if it can't go beneath this 236, you could come up to this level and then start to make your way back down. It all depends. This is the safer idea to look at, possibly coming lower. It's V-shaped pretty well, so coming back down for that double bottom idea seems to make the most sense at this time. You are getting the cross up of the hourly, and Asia brought it back down again. So Asia opened, gapped up. Everyone was expecting it to go down to a 786 level here, so it was gapping up on those people, and now it's starting to come back down and possibly give the inversion of this 236 to possibly go up to here. So it all depends what it does to that 236 1705 region. If it breaks down through it, you could be coming to see the draw down to this wick and below to another wick. If not, you could bounce up to here before doing that idea. We would have to look at the order flow, and we're not going to do that on today's stream. So let's go ahead and take a look. Can you check out Polygon? Sure thing. Matic. How did Matic do among the rise here? So Matic kind of chopped around here. Did not. So as the dominance, this is where the dominance, why did this happen? So dominance was rising. So if you followed the last few days, we were talking about Bitcoin dominance hitting this 618 and getting oversold, having the cross up event. So as the dominance increases, it doesn't matter what happens with Bitcoin. If the dominance is going up, then your alts kind of suffer. So it means take your money out of the alts and put it repositioned back into BTC, or just go to USDT dominance. It depends on what USDT dominance wants to do. We were seeing it go down, which means it was going to go into a trade, which means it was most likely going back into Bitcoin, which is why we were seeing this 12-hour rejection of the cloud come back down. Means that if the dominance is going up and USDT dominance going down, it means Bitcoin is going up. You get me? If this USDT dominance wants to go up and Bitcoin dominance is also going up, it means Bitcoin wants to dump. And the market wants to tank. So when they're not in alignment, it means Bitcoin wants to go up. So, and then not the alts, because the Bitcoin dominance is high. So you have to be looking at Bitcoin dominance as well before you even look at altcoins. Like, you should do that preliminary, similar to what we were doing each time we look at Bitcoin. And then if the alts look like they want to play ball, then, and we were talking last we talked about Matic, we talked about this cross down and coming to this pocket, and sure enough, boom, came right to the pocket and bounced off that 618. Where did we get the 618? From this impulse here. So this impulse to the upside gives you a range to draw from. Okay, so the people that that inserted their money and took profits are looking to reinsert at a stable range of where it retraces on those hopeful breakout trader people's liquidity. And then it was still bullish. It did 1, 2, 3 hits to this zone and now starting to bounce out. What do we do here at this zone? Still holding the super trend on the 4 hour. Pardon me, I had like banana peanut butter smoothie. It's like trapped in my throat. Sorry about that. So daily time frame also bouncing, cloud opening well. You have 12 million in volume right now. So you saw a rise up from this region basically for 8%. Not as good as it could have been because you've come up into this range that we were looking to pause at. The next draw we were talking about is that 120 region. So coming back into that one, into the middle of here, if you maintain the price. All right, so this was in the past, played out, good job. Okay, so where do we go from here? So the same for BTC, it came back, you kind of put 5 time frames oversold. This would have been a higher probability setup. It retraced to a discount, boom, you take it up. It almost gets you at break even, but this is basically the confirmation play. If you raise this up here, make this into a deeper retrace, came to the 786, and now it's starting to come up to these deviation levels. You have some up in here that it could come to. And we have yet to go into that. Let's go take a look at Matic's liquidity and see who's getting wrecked. Or Matica, Polygon. So the short pool's still open here for them to grab. It lines up with that deviation level for that impulse retrace idea. So up here at, wait, this can't be right. Yes, 103. 103.78, 103.78, and a bigger pool up at 105.3. So it coincides nicely with this pool here. So you would look to see it liquidate these guys coming up here, consolidating, maybe coming back down, and then making its way possibly up into these deviation levels. The 1 hour cloud not showing so much strength here. As you see, the cloud is starting to thin on the hourly, not a thick blue 2 o'clock angle just yet. So the alts still paralyzed by Bitcoin's surge and people looking to position into Bitcoin. So be careful of the dominance of BTC taking the star of the show. If BTC dominance continues on its merry path to the upside, then it could basically continue up into these regions. If it breaks out there, we could be making our path to get out of this bearish retrace idea. And then Bitcoin will be the star of the show again. So be careful about that. But overall, you've seen a large rise on dominance, so coming back down, or at least consolidating on the dominance, could be the case. The USDT dominance also coming to a lower low, looking to see it react off of that 5.35% zone and seeing what it does down there. All right, so once again, for Matic, I would be weary with the dominance of Bitcoin rising, but you could see a little bit more of a squeeze up to that pool of shorts up here at 103 and 105. This whole band up here. Right now they're getting a few breakout trader longs, and then they might able to reaccumulate to push it up some more. So if you're in down below, congratulations. If you're trying to play along here, I'd be careful. It's basic NFA, of course. All right, so Bitcoin coming back, holding this range, the 44,696 previous high zone, flipping into support potential. And yeah, we're gonna see how this holds as a range here. And that's my story, and I'm sticking to it, not making any calls, just gonna see if it holds sideways here and does a channel of some sort. And this channel can do, you know, descending, just regular, or it can start to ascend upwards into the shorts. 3 things it can do now, 1, 2, or 3. Chances of it doing this are slim, so no reason to short this strength right now. Just watch what happens and see from there. Okay, so that's my story, and I'm sticking to it. So thank you very much for your time, and thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and catch you on the flip side. Check out my new video about order flow if you haven't already. Peace.